Hi, welcome back to the channel. Now, in this month's September stock market outlook, I'm going to walk through another really high-level broader market overview of the US stock market. I'll spend around 5-10 minutes just walking through all of the broader US market indexes, and as usual, I've got around 20 of my best stock charts for your watch lists going into September, and hopefully the Scottish accent isn't too difficult to understand. Now, it's taken around 20 hours to prepare, present, edit and upload, as most of you know, so I do hope you find a lot of value from my hard work and consider smashing the like button. If you follow me closely on X, hopefully my charts have helped you to buy stocks over the last few months, and hopefully my work last month also helped you in some way. As usual, there were a lot of really great slam dunks out there. Now, for disclosure, myself or my clients may hold positions in some of the names mentioned, but I have highlighted disclosures on the charts with the graphic that's just popped up on your screen. Now, most of you know I don't use any magical hindsight indicators. I timestamp absolutely everything, which is massively important. I'm one of the very, very few who go on the record with their work. But before I get into it, to be completely clear, I'm neither a perma-bull or a perma-bear. I just analyse the charts and the data as it comes in, and I draw logical conclusions using my own charts. Now, please pause the video. Very, very important disclaimer. And as I said at the start, please smash the like button, share on social media, and consider subscribing. It really does help with the YouTube algorithm and helps to get my work a little bit more noticed. But as we're in the middle of earnings season, I got some positive feedback last month regarding a rule that I shared, so I'll share it again. Really simple rule that you can implement today. For those of you that keep gambling on earnings and losing, maybe consider only holding through earnings if there's a minimum of 10% profit in the position. It really does help to protect against the holy shit, it's collapsed overnight nightmare that I think we all try to avoid. So hopefully that helps some of you out there. Now, I want to start this month's analysis with a really hot topic, and it's September seasonality. Now, for those of you that are not familiar with September, it's the 1 month of the year that we all dread as analysts, as traders, investors, whatever you want to call it. As we can see, traditionally over the last 75 years, September is one of only 2 months of the year that has an overall negative expectancy. So coming into every September, generally I am a little bit on edge. Obviously with the market pushing against new all-time highs, there's obviously an added element to it. But just to bring into focus the actual month of September, we can actually see that over the last 75 years, it tends to be more towards the end of the month where we can start to kind of get a little bit of an issue. Now, the other thing to say is I use seasonality very, very sparingly within my analysis. It's something I'm aware of, but in order for seasonality to obviously take shape, generally you will get warning signals that will come from other charts, whether it be a failed breakout in a major index, it could be the yen ripping, it could come from the bond market. Generally speaking, these are the types of things that I look for on a day-to-day, week-to-week basis. So seasonality is something to absolutely be aware of, but the other side of things, if you had been someone who had sold in May, that would have been a horrible decision. So I do like to kind of use seasonality with a large pinch of salt, and I'm more reliant on better signals with the charts. Now, the longer term view that I have for the S&P 500 just really hasn't changed. This has been my chart for years. The upside objectives I'm looking for here are up around 6,700. Now, based on the where we are today, that represents around 4.5% further upside in the S&P 500. So, if I was just kind of playing devil's advocate a little bit here, there is a school of thought that I'm leaning towards that maybe the market moves higher over the next couple of weeks, hits that 6,700, and then we get a little bit of a sell-off. Now, for some of you who are maybe not familiar with what these lines on the charts are, these are Fibonacci extension levels. I only use technical tools if I can see that they have merit for that particular chart, and I think for the S&P 500, as the chart can demonstrate, bad things tend to happen in and around these levels. So it's something that I'm very, very aware of, and 6,700 is of course the upside target that I'm aiming for in the S&P 500. The other thing to say is if the market does an about turn and we put in a failed breakout and we drop below the tariff crash levels, then again that would be another solid technical exit signal, along with the 10-month moving average as well, which is a really good risk on, risk off indicator, which can actually help you to bypass a lot of damage when the market does inevitably turn to the downside with its annual correction. The triple Q's chart. Now, the other thing to say is I am recording this a couple of hours before we go into the long weekend in the US. It's, I think, Labor Day on Monday. The market is coming under a little bit of pressure today, not massively, but we are pushing against all-time highs in the triple Q's. The upside target I'm looking for here is around 658. Although, the S&P 500, what that does at 6,700 will dictate, I think, whether or not the Qs will inevitably, keep going higher. But failed breakouts in major indexes are always a really good early warning signal. So again, if we do start to kind of break below key levels in major indexes, again, that might just be an indicator to say, let's tighten up stops and watch and wait and see. The Dow Jones is again pushing against new all-time highs. I was really, really happy last week. Something that I was communicating with my clients is hopefully the Dow can just kind of give the rest of the indexes a little bit of extra oomph. But the upside target that I'm aiming for here with the Dow is up around 480. I don't actually mind a little bit of chop at the index level, because I think a lot of my work is focused on obviously a lot of individual stocks, a lot of individual names, but very, very mindful of spotting corrections and crashes, etc., before they take shape. So I don't mind a little bit of chop at index level, just for complete honesty with you. The NYSE composite is again looking like it's probably going to go out at new all-time highs. There's obviously within the NYSE composite, you've got a lot of foreign names. I think Chinese names are doing pretty well today. Alibaba News, for those of you that aren't aware, they've kind of designed their own chip. I believe it's going to compete with Nvidia. Not massively surprising, but again, new all-time highs for the NYSE composite. Same message with the Russell 3000. Again, it's pushing against new all-time highs. One of the pleasing stories over the last few months has been the kind of catch up with a lot of the small caps and the micro caps. For those of you that are maybe a little bit angry at some of the crappiest stocks are up in 50-100%. It won't last forever. The levels that I'm working with here are previous all-time highs in the small caps, so there's still a few extra percent there. The micro caps potentially could be a big catch up if it is going to resemble the rest of the indexes that are pushing against all-time highs. There is potentially another 16.5% there in micro caps, so that's something that I'm very, very mindful of. And again, it's very, very difficult to be bearish on stocks when the volatility is continuing to kind of be suppressed. I think if we do dip into the complacency zone, then that might be, somewhere where I might start to kind of get a little bit more defensive in a rampant bull market. But the chart itself, and I'd probably just urge anybody out there to maybe recreate this chart. It's with your own software, because when the VIX gets above 50, I get asked all the time how I'm able to spot market bottoms, etc. One of the charts I like to use is the VIX. As soon as you start getting above 50 in the VIX, you just need to start looking at it from a contrarian perspective. Everybody's having a meltdown, everybody's rushing for the exits, but when you get that spike into the buy zone for the VIX, you don't need to overcomplicate VIX analysis and the volatility index. I see a lot of the volatility gurus out there with all their fancy charts. This is pretty much what most folks need, so maybe just replicate it. The bond market, dead money. I get asked about the bond market all the time. It's been an absolute disaster now for the last 5 years, massive underperformance. One thing I would draw your attention to is the short interest in TLT. It's increasing, it's up around 21%. If you are someone out there who is looking to take a stab at the bond market, you can technically define your risk against those levels dating back to 2000. However, if I'm looking for a strong technical signal that would potentially trigger a short squeeze, you just want to kind of see a little shakeout below these levels and then an almighty rip to the upside. So again, this has been the message that I've had with my clients for God knows how long time, and there's just better areas of the market to be. Gold, on the other hand, is going out at new all-time highs. I can see a short time ago the Stock Twits account has just shared my chart. So yeah, there's 5,000 would be the level that I'd be looking at there for gold. If this breakout can stick the landing, I think it's going to close at new all-time highs today. So congratulations to anybody out there that's a gold bug. And also we've got silver as well doing its thing. And I think, if you're talking about relative performance, gold, silver, I think there's more of a catch up there in silver. Again, that's been my message to my clients over the last few months since we put in this breakout, and $50 is the target that I'm looking for there. Now, I am about to walk through, I've actually prepared around 25 individual stocks this month, obviously for your watch lists, but if you are still here, it tells me that you're getting a ton of value, so please do smash the like button. Like I said, it really does help to get my work a lot more noticed. But just before I get into the charts, the caveat is obviously the September effect. I've got a lot of really great looking charts here, but great looking charts will only be great looking for as long as the market isn't tanking, so just please be aware of that. So I want to start off with NBIS. Again, it's more of a growthy tech name. It's actually one of my high conviction ideas at the moment. Pulled back on earnings, which has been a trigger, but if you are someone who likes the safety of breakout entries, etc., then if it breaks out, I think there's a little base there that's developing, and maybe a breakout above 76 brings in Fibonacci extension levels as potential targets. So I think NBIS is potentially one to add to your watch lists. Lots of airtime with the Nvidia earnings from this week. The reaction has been a little bit mixed. The earnings, as always, are great. Nothing wrong with it. I think the reason why there's maybe been a little bit of a pullback in the last 24 hours, I think, is more to do with the Alibaba news than anything else. But the target that I'm essentially working with is still up around $200. So hopefully the chart makes sense. It's more of a longer term outlook, and yeah, $200 remains the target there for Nvidia. Now AMD, I covered AMD last month, and I just want to give a little update on it because it has been one of my highest conviction ideas over the last few months. Now, on the break of the 20-day moving average, the trend is unfortunately over for me personally. It's the message that I've communicated obviously with our clients over the last few weeks as well. However, That said, if you are someone who's into chart patterns, if we do start to turn about above the 20-day moving average, there is a potential there that you're looking at a double bottom chart pattern, but chart patterns are only confirmed upon the break of the neckline, so there's a little bit of a ways to go there with AMD. I think if you're in the camp that AMD is going to $1 trillion market cap, I don't disagree at all. I think longer term it's great. But in the near term, there's a little bit of pressure on the stock, and it could support a buy low, sell high strategy here. But I would like to see it reclaim the 20-day moving average. Celsius Holdings, again, I covered in last month's analysis. It continues to rip higher. The trailing stop that we have on this one is up around $56. Obviously, price is at 62. It looks like it might potentially go out at new closing highs for this trend. And best case scenario is previous all-time highs back at $100. Apple, again, looks like it's basing. Again, it's another one of my highest conviction ideas at the moment. Thought I would share it with social media. It needs to take out this level at $235. If it does that, again, I think there's a potential for a catch-up trade there to previous all-time highs for Apple. Meta has been frustrating over the last few weeks. I did present this chart last month. I thought I would just give another update on it. Given that it is retesting its original breakout level, I would like to see this level around 725 just kind of hold up on any further weakness. If it does, upside targets that we're looking at there are up around 860. Doximity, again, it's one of those kind of tech growthier areas of the market. Really solid 12 months earnings growth, revenue growth, really low short interest, reasonable PE ratio, etc. as well. Since it has broken out, the target that we'd be working with is up around 85. Boeing, a little bit of a frustrating one, I think, over the last few months. It is in an uptrend. Just be super clear about this. It's one of our active trade ideas, but the target that we're working with here is up around 275. If there is any weakness, it is chopping about over the last couple of months, which is where the frustration I think comes in for investors. But yeah, the target there, I think there's a massive double bottom that is potentially developing there. So 275 would be target one, a break above 275, and I'd obviously re-evaluate the chart from there. Palantir, again, covered this one to death over the last 18 months. For us, the trend unfortunately ended. It's pulled back to its original breakout level here around 150. I think if you are still bullish Palantir, I think you definitely want to see this 150 level act as a solid support level for the stock. Obviously, we all see it. The Palantir valuation is a hot topic. But that said, again, there's massive earnings growth, revenue growth. So can it kind of grow into its valuation? I suspect that's what we see over the coming years. As it stands in the more near-term outlook, buy the dip makes sense, provided we're above this shelf around 150. Microsoft, I did present this last month, just saying that there was selling pressure and it could be a little bit of a pullback. That's pretty much what we've had, but if you follow my work closely, you know I much prefer pullback entries on big mega cap names like Microsoft. We're almost, I think it did hit a $4 trillion market cap at one point. So I think the weakness here, provided the market doesn't shit the bed, I think the weakness here in Microsoft is probably a buying opportunity. Amazon, again, potentially one of those with a breakout to new all-time highs. I think if it can take out that level here around 245, then that would obviously bring in loftier, longer-term upside objectives. I think with something like Amazon and Apple to another extent as well, is seeing a lot of the mega caps going out at new all-time highs and ripping higher. Stands to reason that at some point Amazon and Apple are going to join that party. So we'll need to see how things develop over the coming weeks. We did meet our upside targets on Amazon last month, but patiently waiting for a breakout to new all-time highs to hopefully signal the start of a newer trend for the stock. C Limited continues to go from strength to strength. Massively positive earnings last month. You had an opportunity to buy it at the low end of the risk range, and now it has broken out to new highs for this trend. Previous all-time highs are way up around 360, and this is one of our longer term ideas which has been working incredibly well. And hopefully this is the final leg back to those previous all-time highs. Grab Holdings, it might not be a name that's familiar to everybody, but it's one of those names. I do monitor a lot of 13F filings. Brad Gerstner, Altimeter Capital has a big position. Uber also, I believe, own 10% of the company as well. It has been rather frustrating over the last 10 months because it's just chopping sideways in this very clearly defined range, but eventually, with all good ranges, if it's a good company, it will break out of the range. I think it needs to kind of get above that 570 level, and then I think it could really get going. I think Grab is probably one to just keep an eye on over the next couple of months. But Open Door Technologies is one that is getting all of the airtime, especially if you are hunting around social media, etc. I'm sure we've all seen the name. A lot of very high profile fund managers, market commentators own the stock. Tudor Jones, Pompilano, Eric Jackson. There is a bit of a turnaround story that's developing, but it is going to have to navigate a lot of shenanigans on the way. It's going to be an absolute roller coaster. If you haven't seen the news in the last 24 hours, the interim CEO is now buying up the stock after the previous CEO was dumping all of her shares. The board have cancelled planned sales. They're also looking for a new CEO at the moment, which there will be a big reaction to that. The level that I think you need to watch is that $5 level. I think if there's a close above $5, I think it absolutely rips. So yeah, for disclosure, this has been one of our ideas. I've got a position as well at $3, so I've got a vested interest in this one. I'm just kind of want to see it break out to new highs for this stage of the trend. Roku, I think, is worth adding to your watch lists as well. I would like to kind of see a weekly close above the $100 round number. This is the AVWAP from the previous highs, and as we can see here, there is a very, very clear indication that the market is respecting these levels. So if there's a breakout above these levels, I think Roku is one to add to your watch lists. One name that I think most of you probably won't be paying attention to, it's more in the kind of like the home building area of the market. I think really, really positive earnings from Toll Brothers, reasonable PE ratios, etc. I think it's on its leg back to previous highs up around 165. American Eagle, I'm sure those of you out there appreciate Sydney Sweeney's work as much as we all do. I think there's the potential there for a short squeeze. The earnings are coming up next week, Wednesday, I think, after the market close. Travis Kelce, I think he's got involved this week as well. So there's a lot of the good news. Police are out in force with American Eagle. We'll need to see what the earnings look like, but if they post anything positive that's well received by the market, there's a 16% short interest on it, so it's worth adding to your watch lists just for that alone. So let's see what impact Sydney Sweeney has there. We've got Palo Alto Networks now. It's currently at the low end of the risk range, and it's been one of our buy the dips, and the target that we're working with is up around 205. Now, another one that I wanted to cover is Jumia Technologies. Now, I've been covering Jumia on my StockTwits and X account for a good 6 weeks or so. So I just thought I would give an update there. I get a lot of messages, a lot of emails asking me what my thoughts are. And it's very, very straightforward, folks. I'm not someone who's constantly in and out stocks, timing tops, timing bottoms, interpreting candlesticks. The way that I operate is that I understand that markets trend and I understand stocks trend. So my focus is primarily on just, getting the meat within the sandwich, so to speak, as the analogy. So I use systematic process, and that inevitably means a trailing stop loss. And our trailing stop loss now is up around 764. There's obviously been a recommended buy way down at 375. It's been an absolute monster. If you're out there and you hold Jumia, congrats. There are buyout rumours. We're now at a $1.1 billion market cap. There's still a decent short interest on it as well. So it's working well. It continues to work. I would just, those of you that are trying to interpret candlesticks and keep getting chopped up, and you're not extracting massive gains from your decisions, then I would maybe just urge you to maybe consider applying a systematic process. It really does remove a lot of the noise and a lot of the guesswork. We've got SoFi again going out, potentially new. This would be potentially new closing all-time highs if it does go out here above $25 there. So yeah, I think potentially SoFi, as long as it stays above 25. You've got Snowflake reported earnings this week. The market likes it a lot. So yeah, there are very, very logical levels to aim for, going back up to 390. So potentially that could be a breakout entry there on the back of positive earnings for Snowflake. Uber is probably a little bit of a frustrating one, I think, for many at the moment. It has been chopping about for the last 3-4 months. There is an interpretation here of a potential cup and handle pattern that's developing, but in order to confirm that pattern, it would need to break out above $98. And so again, I think it's well worth adding to your watch lists for September in case it does break out. Netflix has been a decent buy the dip opportunity, going back to I think that's a 20-week moving average. So again, targets here up around 1500. I think the issue I would have with Netflix is if it was to break below $1,000, then I think we'd obviously be dealing with something a little bit more severe. In that case, I'm not really seeing massive warning signals from the market at this exact moment in time. But again, want to see what the market does up around 6,700. We're potentially looking to go out at new highs for this trend for Shopify. Now, this is a longer term monthly outlook. Again, I'm using Fibonacci levels and previous all-time highs back there around 180. It's been a massive buy the dip as opportunity, and it looks like it's potentially breaking out there on the monthly chart. You've got Tesla. I think there's a 6-month cup and handle pattern developing. Now, just for complete transparency with Tesla, I think I'm probably done with Tesla. I don't like the volatility that comes with it. I don't like the shenanigans that you have with, Elon and his tweets and the market reacting to everything that's said and done. But I know there's a lot of you that do believe in Tesla and the future, etc. I see the same things that everybody else does. I just don't like the volatility that comes with it. But I think there's a massive 6-month cup and handle pattern developing. I think if it breaks the neckline near around 365, then it could be an opportunity there. And also as well, I just want to bring into focus maybe one that maybe not everybody's aware of is NU Holdings. Massive market share in Latin America. has broken out recently. Previous all-time highs up around 16.15. It is also one of our high conviction ideas at the moment, which has had a great start this week. Our trailing stop loss has already removed most of the risk from the idea. So again, we'll need to see how things develop over the coming weeks with that one. But if you're still here and you're wondering who it is I am and what it is I do, there's a link in the description, so feel free to jump on to our website at honeystocks.com. We provide access to all of our memberships. Now, just to kind of walk you through what our memberships provide access to our premium weekend analysis, which goes out every single weekend with all of our best charts, our ideas, and obviously our weekend hot list. It also provides access to all of our highest conviction investment ideas. I will show you what that looks like in just a second, and it also includes access to our 5-minute midweek halftime analysis, which just gives a brief overview of any big changes that the market is undergoing and a few trade ideas. Also provide access to a wonderful, highly intelligent community of professionals, investors and traders from across the world. You provide access to our chart books, which cover all of the most liquid stocks, ETFs and commodities from across the world. And if you are someone who is new to technical analysis, systematic process, I'm told I've built out one of the best, most complete technical analysis programs out there. It's helped hundreds of investors over the years. But just to kind of show you what our timestamps and our high conviction ideas look like, our ideas for, SoFi, massive gainer over the last few months. We've got AMD, which has been absolutely massive as well. We've got Palantir, again, absolute monster gainer. GE Vernova, which was massive as well. The trend only recently ended last week. Nvidia, which has been massive. Also, recent one for NU Holdings, I just mentioned a second ago. Very clear instructions on my charts and the analysis. But I am very unique in what I do. I said at the start that I timestamp all of my work and record all of the performance of the ideas that I generate. So feel free to go onto our website and scrutinise every single idea that I've ever put out. I'm not recommending any pump and dumps or any low quality stocks, etc. It's all high quality names. Usually there's really solid fundamentals or turnaround stories within them. So I've recorded every single idea over the last 7-8 years. So like I said, please do go and check that out. Make sure that the types of stocks I like to recommend are the types of stocks that you are into. But I think just on a more general note, I think my work is a good fit if you've got a mid-term approach and you're looking weeks to months out. If you're someone who keeps losing at day trading, you're trying to interpret candlestick patterns and it's just not working for you. I think my work gives a really solid grounding and can get you on a better path. I think if you're someone who's looking to learn more about technical analysis, systematic process, maybe you just want to be part of a community because you're sick of hunting around social media. Maybe you're just busy with work, life, family, etc. to find the best stocks. And also, if you want access to a professional analyst daily, then I am available via my platform as well to respond to any chart requests that you might have. So that wraps up the September analysis. If you have any thoughts or comments, drop it in the comments. I'll do my best to respond. But again, please smash the like button, and if you've stuck here to the end, thank you very much for watching, and I hope to welcome you soon. Thank you.